You're making a big tax mistake. You're probably missing out on money you should be saving and accidentally writing off things you shouldn't be. Either way, you're making a big tax mistake. Today, I'm going to talk about some of the most common write-off mistakes I see business owners make so you can keep more of your hard-earned income and not get in trouble with the IRS. Number one biggest mistake I see, mixing personal and business expenses. The worst example of this is you have one bank account for your business and personal expenses. You don't keep track of it, and you just kind of guess later. This is a recipe for errors, and if you get audited, you're totally screwed. Little bit better is, oh, I have a business account and a personal account, but oh, I used the wrong credit card. No big deal. Well, if you try to expense that or you forget to expense it, yeah, it kind of is. Number two, assuming everything is deductible. Just because you use something, even in your business, doesn't mean it qualifies. There are rules for business expenses. At the very base level, everything has to be ordinary, reasonable, and necessary. So, yeah, you can go out and buy a $10,000 computer for your business. But unless you're into heavy graphics design, that's probably not necessary and it's probably not reasonable. If you write that off, you're going to get in trouble if you get caught. Even worse, I've seen some people run all of their personal expenses through the business because, hey, I am the business. Nope, can't do it. You need to make sure that something is for the business to write it off, and anything not for the business, just because you use it, doesn't mean you can write it off. Error number three, not keeping good receipts or documents. The IRS doesn't accept, I remember buying that. They don't accept a credit card statement or a bank statement. Yeah, that proves how much you spent, but it doesn't prove what you spent it on. Okay, you spent $4,000 on Amazon. On what? It's your job to prove that it's ordinary, reasonable, and necessary. If you can't prove what it is, you can't do that. Ideally, you want this to be digital and backed up. If you're using some sort of an accounting software like QuickBooks Online, there should be an app that lets you easily upload it. I recommend doing that. Now, there's personal use expenses that are also used for the business. Things like your internet, things like your car, things like your cell phone. You can't deduct 100% of those things if they're not used 100% by the business. If you're using home internet for your business and writing off 100%, your kids better not be on that internet. You better not be watching Netflix on that internet, unless it's a business use, which it could be. Make sure you keep track of the various amounts of time or the various amounts of data usage you're using. Be honest in allocating business expenses. It's not worth lying about this and getting caught, and then not only is it getting disallowed entirely, but if they catch you doing this, they're going to rake you over the coals over something else. Number five, double dipping deductions. Now, this often applies when you can deduct something both personally and business-wise, but you can't do it twice. So, for example, if you itemize your personal deduction, you can write off your mortgage interest. You can't include your mortgage interest in your home office as well. You only get to write off something once. And by the way, in that case, if you do include it in both, the IRS can actually disallow both. So don't deduct something if you're also deducting it a second way. The second most common way I see this happens is with cars. For example, everybody can write off their business mileage. There are situations where you can write off your actual expenses instead. But if you're writing off your mileage, you don't get to write off your gas or your car repairs as well, because that's already included in the mileage. So in that case, you got to pick one method, not both. And if you do both, it's on your tax return. The IRS will catch it. Finally, my last big tip, get help, get professional help. Do it yourself is great until it isn't. Small errors can add up. Not writing off things can cost hundreds or even thousands of dollars. Writing off the wrong thing can cost just as much if the IRS catches on and give you some sleepless nights. No, you don't need to hire me before you open up your business. But if you're making 50, 60, $70,000 in your business, you need an attorney or a CPA to help you out with this stuff. Keep saving money.